I ended up pivoting to finance and got a degree in international business and management. It was sent with the pneumonic tube upstairs to the 17th floor of the stock exchange, where women were inputting these orders. They said, okay, everybody, you come and give us $1. We'll give you $10 if you give it right back to us to invest in the stock market. Establishing the interactive marketplace and of trading commodities and also obviously trading stocks, and that they're sort of the baseline of what are the premises that we still trade under, which is our word is our bond, that a handshake is a consummation of a deal. Right, we don't transact money still. We didn't back then. We still don't to this day. I trade $1 billion of stock every day, myself personally, not my own money. But it's still transacted through me, and actually, no dollars are obviously transacted. But that was sort of the beginning of it. And those 26 brokers in 1792 wrote this agreement. The agreement is actually still at the New York Stock Exchange, and that sort of began the whole concept of interactive markets and open outcry. And so we did that from 1792 until 1850. They built the first building there. It was called the New York Stock and Exchange, and then in 1903 they built the Stock Exchange, the NYSE, which is the building that you see there today. Right, and they issued 1,366 seats on the stock exchange, which gave you the right. It's a seat, it's not a chair, you can't sit in it, but it actually gives you the right to trade stock, right? And so the amount of the 1,366 seats, they've never added to them, they've never subtracted to them. That is what you need to actually be a trader or a broker on the floor. And the price of a seat, right, has gone up and down over the years based on the economy. In 1903, it was traded, when it started, it was trading at $11,000. In 1926, it was trading at $60,000. After the crash of '29, it went down to $14,000 when the company went public. The NYSE went public in 1997. It was worth $8.5 million, right? So I've never owned a seat. You could not buy a seat with I've never had enough money to buy. So you can't buy a seat with borrowed money. You have to have your own money to do it. That kept the sort of the club very, very exclusive. I came close a number of times. I had 3 seats in my grasp, but somebody knew that it was my last penny and they outbid me, and so I was never able to get it. However, I was able to lease a seat. So I've leased seats on the exchange for 40 years. And so, what's amazing about the stock exchange is it's different now. Obviously, technology has taken over so many different industries, right? You guys are in marketing and finance, right? It's done from a marketing perspective. Technology's been really helpful. From my perspective, as somebody who's more interested in the human element in markets, that technology has sort of disengaged us a little bit, but it's all fine and good. Back in those days, there were 7,000 people in the main room of the stock exchange, a huge support staff. So before technology, we had a squad, a runner, a teletypist, clerks, and then there were this whole support system that would help run the stock exchange. We were trading back then. I remember in 1987, one of the busiest days, we traded 100 million shares. Now we trade 3 billion shares a day on the floor of the exchange. Back then, there were 18 when the New York Stock Exchange opened. There were 18 public companies. Now there are 3,600 publicly traded companies. If you guys were, for me, actually, it turns out you guys are marketing people. Marketing and advertising and branding is something that, for me, is if I wasn't a trader on the floor, that's probably what I would do. So this is my brand, right? This is the Einstein of Wall Street. It's something that was sent to me by a young Iraqi vet. He had been following me on social media, and he created this little character, which has gone on to become my brand, and it's world renowned. At this point, I have a line of sneakers coming out. I have a fashion line coming out. I've got all kinds of fun things to support me and my brand, which is what somebody needs to do. Do I have my water? Where is it? Anyway, so in 1985, I got a summer job as a teletypist on the floor. There's no training for that job to become a broker, so you literally have to start at the bottom, and you have to work your way to the top, okay? The top being having a seat on the stock exchange, which is an incredibly prestigious position. Now it's not as much. It's a lot different now, but when I got my first seat, so I did it in 3.5 years. It used to take normally 15 years to go from a runner squad which was the person that while we were trading in the crowd, you'd raise your hand and scream squad. They'd come running up to grab the piece of paper from you, take it into the booth. The booth would then report it to the customer, and the customer would the trading desk would then report it to the customer, and there was this whole process of how that thing kind of worked. And then the orders would then be rolled up in a little plastic tube, and it was sent with a pneumonic tube upstairs to the 17th floor of the stock exchange, where women, actually the only women in finance back in those days were the women who were inputting these orders. Buy 100,000 shares of IBM at 132 and a quarter from Bear Stearns, broker 588, blah, 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 all that kind of information. And that's how we created the ticker tape that was then disseminated all over the world to get the information out. Okay? Obviously now it's a lot different. It's being done electronically, so for me it's not that is not as exciting as it was back then. When I got there, you know, as I said, I started as a summer job as a teletypist, and for me, the minute I walked on the floor, 7,000 people screaming and yelling, and the adrenaline and all that excitement, I feel like I had arrived. Right? It was for me the greatest job in the world. In my jobs leading up to that, I went to the University of Massachusetts. My first degree was in agriculture. I thought I was going to be, I don't know, can't really remember that. It was a long time ago. But and then after a full 2-year degree at UMass, which was a good ag school, but it was not really, there wasn't a future in it. I ended up pivoting to finance and got a degree in international business and management. And I moved back to New York from college. I ended up trying to get a master's at Baruch, which I never finished. I was 13 credits short. And so, and then I started trading commodities, right? That was my sort of first inroad into trading. So I was trading orange juice futures and lumber and potatoes, and it was fun. It was exciting. You know, I was 23 years old, and I turned $1,500 into $45,000 over a 3-month period of time, and then lost it in one day. And and it turned out that the way, I don't know if you excuse me, commodities, if any of you have ever traded or traded commodities, the commodities market is pretty ruthless. You know, they have these things called down limit. If the market is going up or down, you can get locked in and you can't get out. And so it was a day where I owned a lot of orange juice futures, and the market was going down. It was sort of like Trading Places. If you've all seen Trading Places, it's sort of a fun Eddie Murphy type of story. But the market was going down. They had announced the frozen orange juice crop, which went against me, and I got locked in. And by the time I was able to, they reopened the markets. My $45,000 was worth $600. And so I ended up trading potato futures. That was it. And then I realized, oh, that's not my future. I ended up opening a record store in New York City in 1980 in the West Village. Okay, I had been in the music business during college. I was managing jazz bands throughout Europe for 2 or 3 years while I was going to UMass. And so I opened this really kind of cool record store. It was modeled after a European record store, and we had listening booths and a coffee shop and a gallery, and all the musicians used to hang out there, and I loved it. It was really a branding, actually marketing marvel, because back then, you know, there were no stores or no a record business was nothing like that. I had a record company, I managed artists, and then I had a store. So I sort of took over the whole gambit, as opposed to sort of sourcing out all the different parts of my business, which has really been how I've done all my businesses. It's basically, you know, sort of a one-stop shop. Like right now, I have a massive, I trade on the floor of the exchange. I have a trading company with my son. We're the last father and son team on the floor of the stock exchange. When I got down there in 1985, there were 70 market-making firms. So there are brokers, right, who are traders like myself. Then there are market makers. Market makers are the ones who put the buyers and sellers together, and they are basically the ones who inject liquidity into the market, and they basically fly the plane. They're the ones that kind of make things happen. Let's say in the old days, if there were 3 buyers and 2 sellers, the market maker would sell stock to consummate a bigger trade. 2 buyers and 3 buyers and 2 sellers, they would sell stock. So they're on both sides of the market on a constant basis, sort of injecting liquidity and creating a smooth and active market. That's the good part of their job. The bad part of their job is when there's a crisis or a crash, they have to buy stock, right? In the absence of the public buying stock, like the crash of 1987. So I've traded more crashes than anybody who's alive today. I've traded through the crash of 1987, and I don't know if you guys are studying finance at all, but you know, it's really sort of fascinating to understand today's market, it's really important to see what's the market has happened in the past, right? So I don't know if you guys are book readers, but there's a new book that just came out by Andrew Ross Sorkin. He's on CNBC a lot. He's a contributor. It's called 1929, The Greatest Crash of All. Right, it's the first crash, not in my lifetime, and none of your lifetimes, but in 1929 was the largest crash actually in history of the stock exchange. Right, it was kind of a fascinating thing, and if you guys like books, it's apparently a really great book. But the way the story is back in the early part of the century, the stock market was incredibly exclusive. Only the 1% of the 1% were allowed to invest in the market. Just rich people, right? The Vanderbilts and the Gettys and the Carnegies, those people who sort of built this country, the Industrial Revolution, right? And then suddenly someone in 1926, somebody decided that they'd come up with this idea to democratize, kind of what happened during COVID, and I'll sort of tie those things together, but the democratization of the trading community. Somebody decided, why don't we let everybody...
It was the inception of personal credit. That Ford, I read the book.
You read the book, go ahead.
Yeah. Ford, when Ford came out, people couldn't really just afford cars. They didn't just have the money available. So how were they going to do that? Credit. So now this is the beginning of the credit. By the way, the author took 6 years in researching and really builds up the people that were factors in the crash and everything going on, including a lot of changes in legislation and how now these companies operate. But once they changed the rules to personal credit, it opened up now where basically on every corner there was
a little kiosk where you could buy stock.
Right.
I mean, the fascinating thing was, what they did was, everybody, in order to sort of democratize this thing, they said, okay, everybody, you come and give us $1. We'll give you $10, 10 to 1 margin, if you give it right back to us to invest in the stock market. Okay? And so every Tom, Dick, and Harry and Jane decided, oh my God, I want to be involved in the stock market. I've heard it's a way to make millions of dollars. And so everybody walked, literally, there were kiosks, there were tables set up all through Wall Street where you could just walk up and give them $1. They gave you 10 as long as you gave it back to them, and they bought you stock. Right? And that year the market was up 100% based on this sort of bubble, this margin that they had built. And so until somebody suddenly said, well, wait a minute, I'm up 100%, maybe I should try and sell it. And nobody could sell it, right? They realized there was a lot of smoke and mirror, there was a lot of strange legislation that was going on. The big guys sort of got a little over their skis, and the minute one person tries to sell something, it's like we've had run on banks. If you've ever seen It's a Wonderful Life, the worst thing you can do is close a bank and not let people have access to their money, right? They were not able to sell the stock that they had bought, and there was a run on the banks, and then there was a run on the market. Right, and the market, I don't know, it was 39%, something that sold off. It was a massive sell-off, and it changed the course of everything at that point. And that was that, and once again, it was a place where a lot of the big guys sort of think about it. Is that I'd love to be able to spend some time explaining to you all the different crashes, because every crash that we've had from 29 to the crash of 87, which I was a clerk trading, and then obviously the 2000 internet bubble, and then the great financial crisis of 2008, right? And then obviously COVID, and then the sort of mini crash that we've had since Mr. Trump is around. So first one being the tariff one, and then recently the one we had a few weeks ago based on the war in Iran. But each one of these crashes has had different components that played a role. Obviously, COVID was a health crisis. 2007 was a predatory lending crisis. Does anybody know here what happened in 2008? Why we had that crash, which was so massive? Basically, a bunch of the big guys decided that they were going to give credit, once again give credit and sell houses to people who could not afford credit and houses. And they sort of sold them on the idea that the market was going up. You buy a house, it's going to be okay. We'll give you some credit cards. We'll get you through this. And before you know it, that house is going to be worth a whole bunch more money. And you're going to be able to sell it and turn it over and make money and pay back your credit cards and all that stuff. Well, what ended up happening was they did that to millions of people all over the world. The market did not go up. Those houses ended up going into default. People did not have the money to pay for it. Right? And then, so what happened was our banks ended up having millions and millions of mortgages on the books that were bad debt. right? And so what do you do with bad debt? You put it in a nice little box with a bow on it, and you try and sell it to somebody across the ocean for 50 cents on the dollar. There's always someone willing to buy something at 50 cents, at a 50% discount. So they did that, and those people then suddenly had to, they never opened the box. They took it for granted that whatever was in the box was worth something, right? Until things got a lot worse. And then they looked open in the box and said, oh no. And so they put it in an even nicer box with a nicer ribbon and sold it to someone else for 25 cents on the dollar. And that went down the whole daisy chain all the way to across the earth until we realized, somebody finally opened the box and realized that this stuff was worth nothing. Right, and we had ended up having the crisis, and Federal Reserve had to step in, right? We lost, obviously, Lehman Brothers was the one company that sort of was the one that had to bite the bullet. There were some that, I mean, there's some great movies about it, some great books about it, but, you know, some people were able to survive that, right? AIG, biggest insurance company in the world, was able to be bailed out. General Motors was able to be bailed out, and a number of companies just went under. They were the ones that were the sacrificial lamb on this thing. And, you know, what ended up happening was that the Federal Reserve was forced to print money, once again, a stimulus like we saw, I'm sure you all remember, during COVID. Now, what happened during COVID, they had learned their lesson from the prior situation. So we're in this situation, the banks are going under, the economies are in deep, deep trouble. There's millions and billions of dollars of bad debt mortgages going around the world. Now, the bad part of the story is why I said it's a predatory lending situation, because the big guys, the Goldman Sachses of the world, who are selling these mortgages, were buying insurance called credit default swaps. They were buying insurance that the things that they were selling you guys were going to go bad, right? It's like as if I took life insurance out on you and I slowly poisoned you, right? So they actually made a bet that the things they were selling, that they were telling everybody were going to be good and were going to be worth a lot of money, they were betting that they were going to go bad. And that when they finally defaulted, all those poor people got foreclosed on and they made a lot of money, right? Bad guys. Okay, we won't get into that. Anyway, but that's what ended up happening, and that's the story. The Federal Reserve Bank ended up, who are the ones who control the money supply, they're the ones when we're in a crisis, they're the ones who print money, right? So they printed $800 billion worth of stimulus, right, and put it into the system. They bailed out General Motors, AIG, a number of other companies, and they put $800 billion into the market over 18 months to try and get us out of this jam we were in, and it took 9 years for the market to get back to even, okay? During COVID, we were in a much worse situation, right? Because it was a global thing, it was a health crisis, people were dying, the whole world shut down, right? And they realized that $800 billion was not going to be enough to get us out of this jam. So what did? They printed $3 trillion, and they injected that into the system over 3 months, okay? A whole bunch more money and a way faster track. And we were back to even. Remember, COVID was March 23rd, right? Unfortunately, I got COVID. I almost died from COVID, and so I've had 7 neck surgeries since then. It's been a hellish ride. But however, the market got back to even by August 12th. We had COVID was March 20th. Within 5 months, the market was back to even. So they had learned their lesson from the '08 crash, knowing that we need a lot more money, a lot more stimulus. Now, there are obviously downside to stimulus because you end up having inflation and all the other problems which we're now trying to unwind and get ourselves out of. But they were able to get out of that really bad situation in a much faster period of time. The market, think about this. So by August, we were back to even. In 2020, the market went on to be up, close out the year up 20%. 2021, we were up 22%. 2022, the market went down, right? So if you think about it, since COVID, the market's up over 145%, even in the eyes of all the madness that's gone on, right? A couple of global wars, you know, oil going from negative $25 to $120. All these things have happened, yet the market is so incredibly resilient and has sustained itself through all this stuff. So anyway, the bottom line is that we were up 20% in 2020, up 22% in 2021. In 22, right, obviously we had raised it, so with printing all this money, you create inflation, right? The only way to deal with inflation is to take money out of the money supply. So how do you do that? You raise interest rates so that people are less likely to borrow. So think about it. For a while, we had 0 interest rates. All of the NVIDIAs of the world, you guys know those stocks, right? Palantir, all this AI stuff. Those companies have been fueling their R&D by borrowing money from the federal government for 0 interest. and then putting it into the companies. And that's how they grew from being a $30 stock to a $200 stock post 10-for-1 split. Right? So, I mean, that's how this whole thing works. Most of the larger companies borrow money when interest rates are zero. They borrow money, they fuel their own growth, and then they pay the money back. Well, in order to take money out of the system, right, they started raising interest rates. And we raised interest rates 18 consecutive times from 20 to 23. I guess, and what ended up happening was to curb inflation. Now we got from zero interest rates to 5.5%. We had inflation of 8.5%, and our job, the Federal Reserve's job, was to get inflation under control, okay, and to figure out a way to deal with all this money that was in the system. So the only way they could do it was to start raising interest rates. Everybody stopped borrowing money at the speed they were doing it, and now we are trying to unwind that trade by lowering interest rates. Mr. Trump, the last president tried to do it initially, right? Biden, we had a couple of interest rate cuts to get the thing started, and then Mr. Trump wanted to be much more aggressive about lowering interest rates. Unfortunately, you cannot lower interest rates just willy-nilly. You just can't say, oh, today I'm going to do it, which is Mr. Trump's basic approach to those things. He is not an economist, even though you may think he is, but he's not. And so what ended up happening was, if you lower interest rates while the economy is in a slow growth environment, you end up with this thing called stagflation, which is a thing that's really hard to navigate your way out of. And so, anyway, so 2022 is the 1 year that the market was down, basically as we were trying to understand how to start lowering interest rates and take money out of the system, deal with inflation, which has gone skyrocketing and whatnot. 2023, 24, 25, the market was up 20+% every year, which is extraordinary. For the last 6 years, the market is up 145%. Even in the eyes of all the madness that's gone on. I mean, think about it. We had a Ukrainian war, we have an Iranian war, right? And a war that relates to a commodity like oil. I mean, if you guys have been watching the stock market over the last, 7 weeks since this war started, oil was at $65 a barrel. Oil went to $119.20. For every $10 rise in the price of oil, that is equivalent to 1% GDP, gross domestic product. Right? An economy that was trading around 3.5–4% before the war was a fairly healthy economy. We went from a healthy economy with oil at $65 a barrel to an incredibly unhealthy economy and oil at $119 a barrel. When oil trades at over $110 for a sustained period of time, you end up having massive effects on the economy in general, inflationary things. Obviously, the price of gasoline goes up, the price of eggs go up, the price of everything goes up, travel, the whole thing. And that's kind of where we are right now. Amazingly enough, while this war was happening and the price of oil was going up, when oil goes up, markets go down. And that's a classic inverse relationship, okay? And the other way is the same thing, okay? When Mr. Trump decided to call that ceasefire the other day, one of the many times we've called the ceasefire, then the price of oil went down and the market went up, okay? I mean, it does this, it keeps going up and down. It happened literally last night. I was in a masterclass night at 8 o'clock, and out of nowhere, the price of oil spiked up $16, and the market sold off. Some tweet had come out. I always say we're one tweet away from crazy town, and that's the bottom line. In the old days, you had to, in order to put out information into the universe that was going to impact our economics and our markets, it had to be done at a designated news conference or before the market opened or after the market closed. You could not do it at 2 o'clock in the morning after, eating a bucket of Kentucky Fried Chicken and just decide I'm going to tweet about some war in Iran that is erroneous. And then the market goes up and down trillions of dollars, right? That's not the way the business used to be done. So, all that being said, I could talk about all this stuff over and over again. Right now, just to kind of give you a little sense of where we're at, right? Amazingly enough, 3 weeks ago, the market was in deep trouble. We had eroded about 7, 8, 11% of the market. Software stocks were trading at half the price they were 3 months ago, right? Tech was under a lot of pressure, down 10%. And quietly, over the last 3 weeks, we were able to get back to even. We were able to get the S&P 7,000. And we're basically trading once again at record highs. In a sort of a funny little quiet way, this market has just gotten back all of the losses that we've had since the beginning of this war. At one time or another, the market just tends to disengage war, right? We know, because if you go back to last year, February, March, and April, if everybody remembers, we had this, that was like that Liberation Day, Independence Day, whatever that was called, the day of the tariffs, right, where Mr. Trump had sort of was, throwing out 180% tariffs to everywhere in the world, even countries that didn't have humans in them, and the bottom line is that sell-off from February 19th until April 19th, the market sold off 20.8%. Okay? Basically because of the way Mr. Trump disseminated the information. Right? If he had come to the market and said, you know what, I'm the new sheriff in town, I like tariffs, this is the way it's going to be a little painful, you guys are going to have to deal with it, we probably would have dealt with it. But the way it was done, by sort of throwing out these huge swaths of 180% tariffs on China and Mexico, and I'm going to blow up Greenland and all this other madness, you end up with a market that markets can handle anything except uncertainty and anxiety, right? It literally, markets have sustained everything that's happened to it and still continue to forge higher. But what they can't deal with is all that uncertainty. And so when you've got today's 185% tariff and tomorrow is no tariff, and then we've got this going on and all these mixed messages, markets can't handle that. So we sold off 20.8% until Mr. Trump said, okay, there's nothing to see here, let's hit the switch and now everybody buy the market. And if you'll remember, we sold off in 11 weeks, we were back to even in 4 weeks. Right? Same thing just kind of happened recently. We sort of, we were done selling it and now we're buying it. Right? So, I'm hoping you guys are, how old? 18 to 22, give or take, right?
Master's students.
You're a master's student, awesome.
22
okay.
plus.
I hope you should all have an account, right, where you put a little money every day, every week, every month into, and I'm not recommending any of this, but into the S&P 500, right? That's a basket of 500 stocks. Right, at your age, if you were to put $250 a month into the S&P 500 from your age until my age, you would have $1.4 million of passive income. Think about that. You do not need to wait around until you have a whole bunch of money to invest in the stock market. Put $10 a week in, put $50 a month in, whatever you can. That money will grow. The S&P 500, since inception, is up over 10% a year. Right, so you should not be sitting around waiting for anything to happen like that. Just start putting some money in it. If you guys want to learn to trade, I'll be happy to help you. I run a trading academy. I have 30,000 students all over the world. We coach and mentor all our students. Trading is a really fun thing. Now, you guys are probably going to, when you're done with school, are going to want to go out there and try and find a job. So there's a company called State Street. It's probably the largest investment banks in the world, and probably the biggest. And I was on the phone with them last week, and they said that there is a massive shortage of financial advisors. Okay, and that they're going to make a massive initiative to people like yourselves to go out there and become financial advisors. So if that's an attractive thing to any of you, you can come and reach out to me. I'll be happy to connect you with that. So they're going to use me as sort of the funnel. They're going to go out. So basically, the State Street are the ones who probably run your parents' and your grandparents' investment accounts. It's kind of enterprise investing. But they've realized that the retail investor, you guys, right, are going to be the greatest generation of all investing, right? Because you're just coming out of the gate with a lot more knowledge than people did 30, 40, 50 years ago. And so they're going to be going after you as retail investors for you to give them your money to trade. And they're also going to go after you to try and create this culture and this landscape of the next generation of investors, traders, and financial advisors. So that's it, really it's actually a cool, fun job, right? So if anybody's interested in finance, and that's an opportunity that's out there. But, I could talk about this stuff forever. Why don't we ask some questions?
Yeah.
Sure, go ahead, sir.
Can I just ask 2 questions?
Go ahead.
Thank you for all this knowledge and everything so fast. First question is, I'm curious about your daily and weekly habits. Do you have
my work habits or my other habits? How you mean how I live my life day to day type thing?
Is there a fixed habits that you do daily or weekly?
There are actually. I'm sort of a strange dude. I'll tell you, the things that have, so look, discipline and consistency, and look, you have to realize that I was not always, the person you're seeing in front of you now is not the same person I was 30, 40 years ago when I started on Wall Street, right? I had hair down to here, and I was a little eccentric, and I was wild and crazy, screaming and yelling and trading, right? And so I would say over the years, I've sort of pivoted, right? As we're all probably going to have to do as the world changes, our lives change, the demands on us change, right? I was in the food business, so I'm sort of a multitasker, right? I'm an underachiever. I'm a multitasker. I do have tons of different businesses. Right now I'm on the board of 6 different companies. I run probably 4 different companies of my own, right? I have a massive social media platform on Instagram, 1.2 million. Plus I have brand deals with Robinhood, with Polymarket. I just got a book deal. I'm writing a book. And so my day is really busy. I have 2 podcasts and 2 YouTube channels, which I support with content on a regular basis. Jack Ma, right? He and I sort of we sort of bonded because he's short like me. He's this tiny little guy. And that day when Alibaba opened on the floor of the stock exchange, he made $285 billion. Jack Ma was turned down 99 times for a $5,000 loan that nobody supported what he was doing. And he never gave up. And it was that last time that somebody lent him $5,000 that helped him grow and build Alibaba. Right? So, the bottom line is you never know when you're going to wake up. Right? So while I was going through all of this stuff, right, there was a big part of me that really just wanted to give up and hide. I was really, really sick. I was in a neck brace, right, for 5.5 years, right? Plus all this other stuff that was going on. So for the most part, but I'm a survivor, right? My parents are Holocaust survivors, right? They spent 4 years in concentration camps. So my DNA is one of resilience and kick-ass, excuse my language. And so, everybody's going to go through shit, right? And so the bottom line is you got to know that no opportunity is going to find you cowering under the covers at home, feeling sorry for yourself, and you've got to go out there and read the signs, right? There was 2 years during 2006 and 7, right before the financial crisis, where my business completely dried up. I was going through a whole bunch of stuff, and I was trying to support my wife and kids, and it was a hard time. And I suddenly went from being really successful to making no money. And for about 2 weeks, I kind of hid under the covers, didn't go to work, and it was like where's Peter? This is ridiculous. What's going on? And I realized that no opportunity was going to find me hiding under the covers. And so I sort of suited up, I got dressed, I went to work, and I made believe everything was cool. Anybody would ask me, I literally kind of faked it. I showed up at work and went to work. I wasn't making money for 2 years. I borrowed money, I lived on credit cards. I did everything I had to do to survive. And literally one day, I was on the subway, I ran into a guy who I had done business with years ago on Wall Street. And he said, what's going on? I haven't seen you in a while. How's everything? And it was the first time I was being honest. I said, you know what? I'm broke. My business is gone. I'm in trouble. And he goes, come on, we'll get back together. Let's start trading. Right? And we put a business together, and we ended up trading together for 20 years after that. Right? So I say that to say that you literally, opportunities aren't going to find you hiding away, right? And if you need help, ask for help. That's one of the biggest things. When we are going through stuff, we tend to isolate, we tend to hide, and we don't ask for help, right? We kind of feel we lose that confidence, we lose our mojo, we have no self-esteem, and we just want to disappear. That's not an option, right? For me, it's not an option. It shouldn't be for you guys, right? You have absolutely undaunted opportunities out there. Right, so I suggest that you all go out there. If you're going through something, ask people for help. I promise you, they're going to. I have gotten help and great information from the most unlikely sources, like people who I couldn't stand. Right, would give me really good advice. Usually, when you can't really stand them, it's because they're saying stuff that you don't want to hear. Right, so just kind of listen to those birdies. As far as my habits go, I'm very ritualistic. I do the same thing every day. If you looked at my closet, it looks like Superman's closet. I've got 10 of the same jackets, 10 of the same pants, 10 of the same sneakers. Right, I do the same thing every day because it gives me some level of sort of whether it's a confidence thing or whatever. I sort of follow the same. It's a little OCD-ish, right? I'm a little bit crazy. But, I walk down the same side of the street, but that's okay. I mean, if that's my biggest problem, that's okay. So I do the same things on a daily basis, and that kind of gives me some kind of a surety and sort of direction, right? And every morning, first thing I do is I have to, I do a lot of TV, right? I do 7 TV shows a week, right? Plus my podcast, plus my social media. I put out 7 bits of content every day. So I need to know what's going on. And I'm not a reader. I haven't read a book since the friggin' Cat in the Hat. And so I need to avail myself of, my brain just doesn't work on reading. So I have to avail myself of information some way or another, whether it's watching little videos or talking to people, asking people what's going on. I do have a couple of newsletters that are my kind of go-to. I have people who make me sort of a sheet of what's happening in the world, in the market, so I can literally look at it 5 minutes and I know everything that's going on. I'm kind of really lucky that my brain can assimilate a lot of information. So by October of last year, I was in really bad shape physically. I was going through all this long COVID stuff, and I had this neck brace and all that. And so I started on this protocol of all this, and I'm sure you've heard of this anti-aging, longevity stuff. If any of you have heard of this NAD and glutathione, all this stuff that's incredibly popular now. And so I started on all that stuff, and that's literally given me back 10 years of my life. Right, so I literally have, as you can see, I don't drink coffee, I don't drink alcohol, and I don't do drugs. So this is me with no coffee, right? So you can imagine what my capabilities are. So I have an undaunted amount of energy, and my ability to really assimilate information is pretty extraordinary, right? I'm on this peptide that did you ever see the movie Limitless with Bradley Cooper? So I'm on that drug, okay? So I can see the vortex. If you need the vortex, I can share it with you. But anyway, so that's how I spend my day. I get up every morning. Within the first 45 minutes, I need to know what's going on all over the world as far as markets go. On my way to work, I usually meet some kind of a strategic partner on the opening bell at the stock exchange, somebody who I'll either work with, do a brand deal with, or do a podcast with. It could be a CEO, it could be a fashion person, a finance person, a food person, it doesn't matter. I love to tell stories. That's what my specialty is. So I'll interview virtually anybody who's done something groundbreaking, right? Then I do a bunch of social media stuff, and then I run this academy, so we do coaching and mentoring of our students, right? Usually from 12 to 1. At 1:30, I start trading the market. I trade the market, as I said, $500 million to $1 billion a day in S&P futures from 1:30 until 4 o'clock. At 4 o'clock, that's when my real job starts, where I start doing a number of other things. I'm on the board of these companies, I do all this stuff. So my days are full, and for me, I love what I do, right? That's the key. If you're wondering, how do you keep going, after 30, 40 years, find something. It's not my line, but it's a great line. Find something you really love to do, right? Get really good at it, right? And then have some fun. That's the bottom line, right? That's all I can say. All right? Does that answer both your questions?
Yeah.
Who's next? Yes.
Well, first of all, congrats on your professional career.
Thank you.
And what part of trading AI cannot replace right now?
It's not going to replace, I don't think it's going to replace anything. There are a couple of things where I don't think people want AI to be. Right, I'm not a fan of getting into a driverless car. I don't want there to be no pilot when I'm flying in a plane and there's turbulence, and I don't want AI running my money. Right, I don't want a human being involved. Right, and so yeah, are there algos and AI that can predict what the market's going to do? Probably, but if you are money is a play. The markets are very quirky. Right, the volatility is completely insane. And so right now, more than ever, we don't have 7,000 people on the floor anymore. There's 700, but the human element is way more important than ever before, just because of the volatility. And you want a person, when Mr. Trump sends out a tweet and the market goes up 1,000 points, and 3 minutes later it's down 1,000 points, you want a human being to be able to say, okay, hold on a minute. This isn't real. Somebody hit a button. It shouldn't have happened. And step aside for a minute and wait and look, as opposed to just sort of following the sheep on this one. So look, first of all, as far as AI goes, you guys do not be scared that AI is going to outsource you at all. I work with a guy named Dan Ives, the #1 tech analyst in the world. He's the guy who called NVIDIA at $30. You should all be watching him. He's on TV with me. We have a show on CNN. He wears even crazier clothes than I do. He wears these wild pink suits. But he's crazy smart. And he and I have a show called Einstein and Ives where we talk about AI. AI is going to make your lives way better, right? So don't be scared that because of AI you're not going to have work. As I told you, first of all, I can get you a job at being a financial advisor. But after that, think about it, AI is going to better our lives in lots of ways. Robotics, even though I'm not, are going to change our lives in a lot of ways. We're going to have robots in our houses in the next literally 2 years, right? All the things that you thought were like the Jetsons as opposed to the Flintstones, right? It's going to be happening any moment now. So all that stuff is good stuff, right? So it's not going to get rid of it. Anyone else?
Well,
Yes. Oh,
we
sorry.
got to be mindful of the time because we do have to give up the classroom
Okay.
for the next class.
All
How
right,
could
2 more
how could students stay connected with
Sure,
you?
absolutely. I'm easy to reach. You can DM me. On Instagram, I'll give you my contact info, right? We can do this again if you want. I'm on social media. On Instagram, I'm the Einstein of Wall Street. On Twitter, it's Einstein O Wall Street. I'm on TikTok. I'm on LinkedIn. I'm easy to reach there. If you look up in the sky and you think about me, I'll answer. We have what, time for 2 quick questions? Or are we done?
One question.
One question, you.
Thank you so much for your help. Besides S&P 500, do you recommend anything else?
You know what? I'm not allowed to recommend anything really, but because I'm not a financial advisor. But the bottom line is, for somebody who's not actively watching the market, it just speaks for itself. It's up 140% since COVID. That's a great endorsement of the S&P 500. It gives you exposure to the whole market, right? Everything you would want to be involved in. It gives you some great tech exposure. It gives you some quantum computing exposure. It gives you, consumer staples. It gives you everything. A little of everything. It gives you Tesla, Amazon, Apple, Meta, all that stuff. And so, overall, that's where you want to be. You want to have a little bit of money in all those places. You want to be as diversified as possible. So that's my best bet. The other things that are going to move, I think data centers obviously are the way of AI and GPUs. So whatever companies are going to be the energy source for those data centers, whether it's nuclear, solar, right? They're going to be building data centers in space apparently because of solar. So there's a lot of great opportunities out there.
Thank you.
All right.